be looking at examples of financial assets, examples of financial liabilities, and practical examples of equity as well. But before we do that, we have to discuss or define what a financial asset is. A financial asset says here is cash, and you will discover that it starts with cash because cash is the big boy. Cash is the major item that we deal with. When we talk about a financial instrument, the first thing that should come to your mind is cash, because if it is something other than cash, there's a high chance that it doesn't meet the definition of a financial instrument. And so we say here that a financial asset is cash. It could also be the equity instrument of another entity. But remember that that equity instrument is a result of cash that you have paid out or that you have given out to the party that is giving you that equity. And so we said a financial asset is cash. It could be equity instrument of another entity, or it could be the right to receive cash or another financial asset from another entity. The major thing is when you have a financial asset, it is because you have a favorable condition. And the favorable condition is that you expect cash from the other party. Or it could be that if you have a liability and there's a chance that your liability will reduce, then you have a financial asset. But the major thing is that you are expecting inflows that will add to what you have or that will reduce your liability. So we're looking at several examples and we're talking through how to apply them one after the other. Okay, so let's get into the scenario. We have a practical scenario here. It says a company statement of financial position has the following line items under the non-current assets and current assets, and that is this financial position of the company has all these items. And so what we want to do is we want to determine whether any of these items are to be categorized as financial assets or not, based on the earlier definition that we had. So they were starting with cash. So the question is cash a financial asset? Yes or no? Okay, so you'll be asking, or you may be asking or wondering, like I did when I first heard that cash is a financial asset. You may be wondering, okay, if cash is a financial asset, especially if I have cash in my pocket, where is the transaction or where is the contract? Because if I have cash in my pocket, I am one party that owns the cash. So even if I said it is a financial asset, where is the financial liability sitting? Okay, so it is important to take cognizance of the fact that when it comes to the other aspect of cash, there's this example that I always give, and it's with respect to the denomination of the Bank of England, that's the United Kingdom. So if you're in the United Kingdom, if you take your currency, if you take any of the pounds, whether £5, £20, there is something that is scribbled on the notes. If you look at this part, you will see something scribbled there. It says, I promise to pay the bearer on demand the sum of this. So the question is, who is making that promise? In this case, it is the Bank of England that is making the promise that anytime you hold that money and you go to the market, to the superstore, to the shopping mall, wherever you take it to, even to pay for rent or anything, the liability is sitting with the Bank of England, such that even if they release a new currency, you can still take that money and take it to the Bank of England to get something else, that is to get fresh or new currencies. And so it means that when you have cash in your pocket, the other party involved is the central bank of your country. And so it does not matter whether you are in England, you are in the UK, you are in the US, Canada, or wherever you are, as long as you have cash in your pocket, the other party, which is not physically present with you, is your central bank. And so this explains the fact that the promise or the obligation lies with the issuer of those currencies. And so that is why our cash itself is a financial asset. Okay, so the question is cash a financial asset? You know the answer already. Yes, cash is a financial asset. Okay, so let's move on to the next one. Trade receivables. Trade receivables stems from the fact that a company sells goods on credit to customers and you expect that the customers will pay you back for the goods sold. Now, because you expect that the customers will actually pay you cash for the goods sold to the customer, then it means that a trade receivable meets the definition of a financial asset. And we mentioned that the contract does not need to be written, it could be implied in the sense that that's the way you conduct your business. And so, yes, trade receivables are financial assets. Okay, so let's move on to the next one. So we do have property, plant, and equipment. So property, plant, and equipment basically talks about the non-current assets, fixed assets that you do have in your business that you use in the process of production. One of the examples that you do have when it comes to PPE is actually a motor vehicle. And so if you have a truck that delivers your goods to customer, the truck itself does not give you the cash. I mean, you don't expect cash from the truck. What you expect is the consumption of the truck. Consumption in terms of usage of the truck. You're not expecting cash from the truck. Even though your truck is part of your business that helps your company to generate revenue, but it does not directly give you cash. So the question of whether PP is a financial asset or not gives us the answer of what? Of no. PP is not to be considered as a financial asset. Okay, so let's move to the next one. The next one talks about prepaid expense. Now, a prepaid expense simply means that you've paid in advance for something. So, for example, if you rent a place and you pay the landlord for the expenses for the rent, so you pay in advance, say you pay 2 years in advance, that payment, what you expect to receive as a result of that payment is not cash. What you're expecting to receive is the usage of the rental space. And so prepaid expenses are not financial assets. So the question of whether they are or not is no, because what you're expecting to receive is not cash. Okay, so let's move on to the next one. It says here that a staff loan. So a staff loan basically means that a company has given its employees loan. It could be for car loan. But the major thing is that the company has given the employee the loan for the employee's personal use. And so because of that, the company expects that the employee will pay back either through its salary or pay back cash in other ways. Now, but the major thing is that the company is expecting cash from the employee. So the question of whether it's a financial asset or not simply means we have yes as our answer. Now, this next one, you try it, a staff advance. A staff advance simply means that you as a company has given out cash to your employee. And for example, in consulting, what happens is many of the time we do have clients that are located outside our location. And so what we do is we go there, we spend some nights, pay for some hotels, buy some dinner and the rest. And so all those expenses, we accumulate it on behalf of our company. And then when we get back to the company, we do say that, oh, this is the amount that I spent, this is the amount that is left. Now, because a staff advance is meant for a particular consumption, I mean, the money that we have spent for the purpose of that staff advance, we are not expected to give it back to the company. It is for business use. And so because of that, you agree with me that staff advance will be what? The staff advance will not be a financial asset. And so our answer to that will be no, because staff advance are not financial assets. Okay, now so let's look at the next one. The next one says here that accrued income. And so what's an accrued income? An accrued income simply means that you as a business, you have delivered a service, you've rendered a service, you have completed your own part of your performance, and then the party that is receiving your service is yet to pay you. And so it means that you've earned the income, but the other party is yet to pay you. So what that means is that you're expecting cash from the other party for the service that you have rendered or for the goods that you have delivered. So for example here, imagine this plumber has already worked on a particular business project and then expect the business to actually pay the cash. So what will happen is that this plumber will actually be recognizing that it has an accrued income, and that accrued income is expecting cash payments. So yes, an accrued income is a financial asset. Next one, we have loans and advances to customers, and you often see this in banks. Majorly, banks do have several customers, and when customers make deposits, oftentimes there are some customers that don't just approach the bank to make deposits, they approach the bank to take a loan. And so because of that, when loan is given out to a particular customer, the bank records it as loans and advances to customers. Now, because the bank is expecting what? Cash. Now, because the bank is expecting cash from the customer, it is recorded as a financial asset. And that implies is that loans and advances to customers are to be identified as financial assets. Okay. The next question here is about investment in shares. So an investment in shares, which simply means when you have a 20% or less investment, that is the investment that you have incurred to buy those shares is not translated as you having significant influence or you having a joint venture or a subsidiary. So you are ruling it as an investment in shares that is less than 20% or that does not meet all those other items that I mentioned. So because you are making an investment to buy equity from somebody, we call it investment in shares. I will call it investment in equity. And what you expect to get is also cash. Although you do not expect to get cash immediately, but you expect to get cash in form of dividend, you expect to get cash in form of capital gains. For example, if you have bought shares of Apple Incorporation and decide to sell that shares to somebody else, you actually get cash as a result of selling it. So because cash is involved somehow, your investment in equity will be a financial asset. So the question of is it a financial asset or not? What will be our answer? It will be yes, because you're expecting to receive cash. Okay. Now, value added tax receivable. Now, value added tax, oftentimes in some other parts of the world, they are called sales tax. And sales tax are taxes on goods and services. And so, when a company actually expects to receive value added tax from the government. So there are situations where you are expecting to receive value added tax. The value added tax is a no. It is not a financial asset. And the reason why it's not a financial asset because remember we said that a financial instrument is any contract. Now, a value added tax is not a contract. It is statutory obligation. Now, when something is not a contract and it's a statutory obligation, then it does not meet the definition of a financial instrument because it is not a contract. It is a statutory obligation. So other examples like withholding tax receivable are not financial assets or financial liabilities because they are not contracts. They are statutory obligations. And our definition of a financial instrument is such that financial instrument has to be a contract. And so our answer here is no. Then the last one here is bonds. A bond could be a corporate bond, it could be whatever bond that you have purchased is more like loan as only that bonds are often long term. And so, for example, if you have bought bonds and then you expect to receive coupon rates, which is often same as interest rate on the bonds, because you're expecting to receive cash as a result of you holding those bonds, we can categorize bonds as what? As financial assets.